In the Forex, indices, commodities, and futures space right now, there is one word that is on everybody's lips. You will have heard it, unless you live under a rock, under a tree, or in the desert with no internet connection, then maybe I will understand that you haven't heard it. However, this one word is ICT. Now, ICT is the staple for most people coming into trading nowadays, whether it be beginners, whether it be intermediate people. There are many people that are switching to ICT from their long-term strategies. And the simple reason for this is that it works. It works really well. It's a methodology that makes sense, and mentally it's easy to apply to the charts because everything you do has a reason. There are many traders that are trading with ICT concepts that are withdrawing 6 figures from the market on a monthly basis. There are traders managing 7 figures with ICT concepts. You will know all of the biggest names in the industry right now that are trading this, and it's becoming bigger and bigger and bigger. And I'm no exception. ICT remains my most favorite strategy to use when it comes to trading. And the reason for this is because it works. It's profitable. It works extremely well, and your win rate is high with a good risk to reward ratio. For psychology reasons, this works amazingly. Now, if you are familiar with my channel, you know that I've been going over ICT concepts in depth with many of my videos at the moment. And if you go into the description down below, you will be able to see my main strategy, which is the Judas swing strategy, which I go over in depth. And this is my version of this ICT based methodology. Now click the link down below to watch it if you haven't already and you're not familiar with the way that I trade. Now, a lot of you guys have been telling me we're struggling to get a high win rate with the Judas swing strategy, and it's for one simple reason. And today I'm going to reveal the secret to trading this with an extremely high win rate and getting really good risk reward ratios. And the secret has been under your nose the entire time, and I'm going to reveal it to you right now. It is mastering the higher time frame bias. Now, I have a very unique way in which I do it, and in today's video, I'm going to reveal it to you, and I suggest you watch the whole video right to the end without skipping anything in order to fully absorb what I'm about to reveal to you in this video today. So let's dive right into the charts and I'll show you exactly what I mean. So a lot of people ask me, what is my favorite prop firm to trade with? And it's pretty easy. It's Blue Guardian. Blue Guardian has the best trading conditions of any prop firm I've traded with. It also has a built-in equity protector to stop you from getting stopped out on your daily loss limit. So guys, if you're looking to get an evaluation with Blue Guardian, I suggest that you use the link below and use the code GARTRADES for 10% off your purchase. So when it comes to ICT concepts, a lot of you guys are getting lost in the lower time frames. And the problem with this is that when you get lost in the lower time frames, you're essentially blind to what's coming in the future. You're blind to what is around you. It's almost like only being able to see a few meters in front of you when you're driving. You're very likely to have an accident. And I keep saying this, but it's true. It's the best analogy that there is. Now, when you look on the higher time frames, you're going to be looking for specific things, and we're going to talk about it now in this video. Now, when you are trading the higher time frame when you're looking at the higher time frame and looking to enter on the lower time frame, so generally I use the 4 hour for higher time frame, and I use the lower time frame as the 1 minute time frame. Now, as we all know, the market makes higher highs and higher lows. Now, once the market, for example here, breaks the high, okay, my drawing is shocking. Once the market breaks the high, okay, what are we expecting the market to do? What has it done previously? When the market breaks the high, we are now looking for market to retrace, okay? And the market is going to retrace into an area of discount. Now, we can use either the Fibonacci or the Gann box tool to start to judge. When price starts to pull back, we can start to judge, hey, this is where the 50% line is. This is a premium zone. And this is a discounted zone, okay? We are waiting for price to come into this discounted zone so that we can trade, right? We do not want to be going long until we get into this zone, okay? So once price breaks structure, we're looking for price to retrace, Okay, because as we know, there is liquidity above these highs because there's lots of people wanting to get long at this point. Okay, people have their buy stops at this area, and so there's a lot of liquidity resting here. So we will wait, okay, for price to get to this discounted zone here before looking for buys. So once we break structure to the upside, we're looking to take shorts, but we're not looking to take shorts super long term, because obviously we know that price is unlikely to break these lows because we are currently in an uptrend. We're looking for price to continue this pattern to the upside, break structure once again. And so what a lot of you guys are doing, you guys are here on the higher time frames, price has broken structure to the upside, and you guys are trying to take longs. You guys are getting caught up in these people here trying to get long. Okay, and that's a problem, right? You're trying to get long and you're trying to hold these trades to kingdom come, but you guys are literally being part of the liquidity. And there's a saying when trading when it comes to ICT and smart money concepts, if you cannot see the liquidity, you are the liquidity. And what going to the higher time frames on the 4 hour allows you to do, it allows you to see the liquidity, okay? It allows you to see the liquidity on the higher time frames. And when you're stuck on the lower time frames, oftentimes you are blind to those higher time frame swings and those higher time frame structures. Okay, so it's important. And what I do is I use the 4 hour and I use the 1 minute, okay? The 1 minute is my entry time frame, and the 4 hour is my higher time frame structural time frame. So what we're going to do is look over the last 2 days of price action, and we're going to look at it through the lens of this. So in fact, what I'm going to do is go all the way back to Monday. Okay. Again, we are on UTC -4, which is New York time. Always best to use New York time, especially if you're trading the US session, okay, which is what I prefer to trade most of the time. So now, what we're looking for is structure. So we're on the 4 hour, okay. Currently, we're at Monday morning, early morning, okay. We are looking at structure. Now, price has broken structure to the upside here, okay? You can see price pull back here, and it broke this high, kind of like the drawing that I did earlier, okay? Okay, we can see that it is currently trending up. Why? Because we've had structure break highs once again, pull back, break, pull back, and break. So I hope you guys can see this. So it is literally just price pushed it up, pull back. This is the lowest point. It then broke, okay, broke this high, which then confirms this as the strong low that should hold. Price should not continue past this point, which it does not. It pulls back slightly into a discounted zone like I showed before. It comes up to this point, okay, pulls back a little, okay, doesn't quite make it to a discounted zone. If I had to draw a Fibonacci from this swing to this swing, you would see that the 50% did not managed to get mitigated, but that's not always going to happen. Okay, it's not always going to happen, but that is going to be your best place to start looking to get long for the long term. Okay, so price has come up to the highs, okay, and we're now retracing. Okay, and we're retracing into a discounted zone. Okay, so price has currently come to the lowest point, which is right here. Okay, whoops. Price has come to this zone here, which is the lowest point. So we've seen that price, if we take our Gann box tool here and we draw it from the swing low to the swing high, this here would be the midpoint. So it is currently at the midpoint right here. Hopefully you guys can see that. I will draw a line from this area. And we can see that price is below it currently. So what will our bias be? Okay, when price is here, okay, we're looking to buy. And the buys, because we are below the zone, also we are in a fair value gap, a very big fair value gap. We're also in, basically this here is an accumulation, okay? So it's basically a giant order block. If you go into the daily time frame, this here is a giant order block. So once again, okay, we're in a very good zone. We've also got, remember, this more refined order block down here, okay? Now it's good to have these areas marked out and to have them take a note of. Now, again, this is just our bias. Okay, so I mark this out on the higher time frame, and then we simply go down to the lower time frames. Now, I'm going to move one candle forward because otherwise we're going to go for ages on the lower time frame. So now I'm going to be using the Asian zones. Whoops, we've gone a bit too far here. We're going to be using the Asian zones, okay, for liquidity, okay? So this is a bit of a mess here. So I'm actually just going to delete this whole thing. So again, we can see that this dotted line here, okay, whoops, let's go to the 4 hour once again, just so we can have our premium and discount marked correctly. Let's extend this line across for us so we know. I'm going to make it let's make it a green color, okay? So we go to the 1 minute. So now we know this green line is our zone, okay? So currently we are on that line, which means looking for buys is not a bad idea, okay? Now, if you guys watch the Judas swing strategy, you will know, okay, that once we sweep either side of the highs or the lows, okay, of London session, that is when trades start to become valid, okay? Now, if we look to the previous, which was Friday, we can see that the lows did get swept, okay? So, and we were below our zone, which is this here, okay? We were below our, in our discounted zone. And so price came down and it swept, okay? And this happened though very late in the session, okay? So again, this is for if you're trading London session, okay? So once again, we would only want to trade London session with this, okay? So with this strategy, it's designed to trade the London session using the Asia session's liquidity. For me personally, I'm using that, okay? And I will only trade for 3 hours. So from 6 GMT time, okay, UTC, okay, you then trade up till 10 o'clock, okay? So about 3 hours. So if we have a look at what price decides to do on the Friday, you can see, and this is again in hindsight, I haven't reversed this trade for us. You can see price took out the lows, okay? And what it did do, okay, it swept the lows and it displaced up. Now, again, our change of character, once it broke, would be this point here. Okay, again, if you are struggling with fractal structure, which is how we decided that this is the area, there will be a link below on how to identify fractal structure as well. Okay, again, crucial to trading this strategy. I give all of this away on YouTube for you guys to use in whatever way you want. I don't, you don't need to get a course or anything. It's all in this video, all in all of my YouTube videos. Okay, so now, once you've determined your fractal high, price has swept the lows, you're then waiting for a break of the fractal high, okay? However, you can see price doesn't trade lower than this, okay? So once we have a break of the fractal high, price continues up, okay? And then we would essentially, on this Friday, have been tagged in on this fair value gap right here. Okay, the only issue here is that once again, we would not have a good risk reward ratio because we are literally looking to get in here with our stops all the way below here. And so that wouldn't really work, would it? And so in a case like this, when you've got a stop as literally 17 pips, I would personally not take it. If you did decide to take it, then you would have been stopped out on the Friday. Again, you won't win every single trade. Now, let's go on to the Monday, where we are at currently with current price. Again, we are below in the discounted zone, okay? We're now looking for price to come and sweep the Asia lows, okay? Which it seems like we just did. Okay, and now we're looking for our fractal change of character, which again, if you need to help figuring out your fractal change of characters, the link below will show you how to do that in one of my YouTube videos. You need to know that, otherwise you're going to struggle to follow along with this video. So again, we still have not, this would be our fractal high right here. Okay, why? Because this low did not break the previous low. It's the last low not to break the previous low. Now it moves down because we now have a more recent low that did not break the previous candle's low. And we've got a new one here. Let's see if we get it. We get it. Okay. So now we're looking to get long. Okay. And what people often do, and this is what this stops you from doing. Okay. People often get this side break first. They take this and they're trying to sell it to infinity. They're like, oh, we're bearish, but we're not. On the 4-hour time frame, we are currently bullish. We're in a discounted area. Okay, underneath this, we are currently in a discounted area. Okay, we have not yet broken structure. Okay, we are busy retracing. Okay, so here, once we break the fractal high, we would then look to get in on a fair value gap, which there is a fair value gap that's very tiny here. Okay, there's one up here as well, which just got mitigated. I know, it's just got created now. So what I'm going to do is, because it's such a short gap, I'm going to hop in on both. Okay, you can cover these lows if you would like. Okay, you can actually. I'm going to do that just purely because it's only 7 pips. Once we start getting over 10 pips, then I'm like, don't know if I want to do that. So you could literally do this, 2.89 risk reward. Let's see, get tagged in. Okay. And we hit our take profit for 2.89. Okay. Once again, if we look on the higher time frames, we could actually be swinging for much higher fences here. Okay. However, for this one, you could also just tackle the highs depending on if you want to. Theoretically, you could look for price to break these highs here. Okay, if you really wanted to. Again, your win rate will go down if you decide to do this kind of trading. And so you could take off partials here at the top and then swing it for those areas because you're in a discounted zone. However, we also have to bear in mind that below all of this, you can see that there might be a bit of liquidity building here. Okay, and we've got this zone, this order block right below. So let's hop on to the next day's price action. Okay. Just so I can illustrate my point. Price continues lower. It's looking for the liquidity down here, and it's looking to go into a discounted zone. Once again, I don't expect price to break this zone. Okay, it could, but I don't expect it to do so. Why? See, this is where the pullback happened. Okay, because this is a protected low in my eyes, because it is the low that broke structure to the upside on the 4-hour. Okay, so where are we here? We're at 5 o'clock. Okay. Right, so Asian session is wrapping up, and once it gets to 6 a.m. London time, we then are looking for potential breakages of these zones. Okay, so let's see what happens. Hopefully, we are hoping that the lows get taken, because then we can take it high, because once again we are under our we're in a discounted zone as long as we're under this line. Okay. In either case, if we came up here, we could have potentially looked at sells, because then we would be in a premium zone. However, we know that price is not currently bearish on the higher time frame. We are breaking highs. Okay, we are breaking highs and retracing. So we would basically be playing a little retracement. So let's see what price did here. So price broke the lows, and our high would actually be much further than this, because see, this candle broke the previous candle's low, this candle broke the previous candle low, and so on and so on. And so technically this would be the last one that did not break the previous candle's low, and so that's what we would be waiting for. Okay, and we get it here. Okay, and so we would technically be looking for this to go long here. So let's hop in on this, covering the lows, right? And then we want at least, you know, a good two risk reward. So I guess we'll just target the highs. Hopefully it takes out both sides of liquidity. Okay. And it just misses us there. And once it misses us, it goes lower. Now, when it comes to this situation, we take the loss, okay? We simply take this loss and we look for a re-entry. We've now swept the lows once again. And so now entries are valid, okay? And like I say again, we won't win every single time, okay? But we allow our edge to play out. And so now we're looking for price to break this. No, this does not even count. We would look for price to break this, okay, which is quite a big swing. So I'm not particularly happy with that. Okay, and now we've broken the lows once again. So we are once again ready to look for entries, and our entry would now be above here. And if you're wondering why this break is what we would wait for, okay, you need to watch the video below on fractal structure, okay? There are rules behind this. Okay, so price is continuing lower, and so now we are looking for this. And once again, price is starting to approach this point of interest, okay? Do we get a break of that high? Okay, no. So we've now adjusted. This would be our fractal high. Do we break the fractal high? Okay, yes, we do. Now, this is very choppy price action. Technically, this would be our most extreme fair value gap. This would also potentially work. In a case like this, let's see how many pips it is. Okay, if it's below 10, I'm willing to work with it. Okay, so I will take this top one. Okay, and then I will go for these highs here. Okay. Okay, we get tagged in. Okay, it continues to go lower. Okay, so on this day, we take 2 losses. Okay. So now we start to look at our higher time frame. Okay. So we get into the higher time frame, and what's happened? We've come into our zone. Okay. Now we've now flipped this zone. Okay, I want price to break and close below the zone. So now we can start to look at potentially going short, because our structure has now shifted bearish because we've broken, okay, the lows of the previous swing. Now, one thing we also have to note is that this is one huge order block here as well, okay? This here is one huge order block as well. So we could, and you can see price mitigated it. Price has not closed below it just yet either. So price could also just be taking and doing a liquidity grab to go higher. So that's also something we need to look at. But technically, our rules will tell us that yeah, we've currently broken structure. Now, some people would also have only classed this as the last low, but personally, this here for me is a valid low. So you can look for short positions at this point. Okay, but because we're in this order block now, you have to think, has price just swept this on the higher time frame? And for me, potentially it has. So we just have to see what happens on the previous day. And so this is where, you know, the confluences start to, you know, need to be stacked. Okay. So let's look what happens on the next day. We're currently at 1 o'clock. So let's fast forward time. Okay. Okay, so currently this is where we are. Okay, so price has swept to the downside. Okay, it did not sweep to the upside. Okay, and so once price sweeps, we're then looking for this to break in order to validate a long position. Now, once again, okay, this is a bit of a tricky example because price has now come into a discounted zone. Okay, price has come into a discounted zone, but it's come just below the swing low, which would technically mean we are bearish. Okay, and so we would be looking for bearish examples. However, guys, what happens when price breaks structure? It must now, okay, on the higher time frames, it must now retrace. Okay, so price is now looking to retrace into this dotted line. Okay, we're going to move the dotted line here. I'm going to draw it right across. Let's make it a little thicker. Okay. So price has broken structure to the downside. Okay. And once price breaks structure to the downside, we're expecting for it to retrace into an area of premium to sell from. Okay. And so that is why once price comes into this order block, I would then be looking to take price long. Okay. Now, we would need this area to break first before looking to take positions long. Okay, price breaks this area. Okay, we've got an order block down here that we could potentially use for entry, and so let's look at this for potential entry with our stop just below. Let's see if it tags us in. Firstly, well, we would look for at least price to come to here. We could even swing it right to the highs if we wanted to, okay, potentially, or not to the highs because we are busy retracing, so we would be looking to take it to this thick line here, okay, till we get into a discounted zone. Let's see if we get tagged in for this position. Okay, so as we can see, price reacted to this fair value gap here. Now, that's also why I say, and here is my rule. Okay, so you can see here we got 9.8. Okay, and the reason I took this one is because, once again, what I often do is take the higher fair value gap and the lower fair value gap, the two most extreme ones. Okay, and then I look at covering both of them. However, we've got more than 10 pips of a stop here, so if I had to do this, it would add on more, and I'm just not willing to do that. Okay, so unfortunately in this example it looks like we missed this opportunity. Okay, unfortunately. Let's see if price comes back for us potentially, but I don't think it does. Let's see, at least not before. Okay, let's see if price comes back for us. It's just missing. It's just missing. Yeah, so price just missed our entry here and continued to our targets, unfortunately. So, no worries. We look to the next day. Okay. And so now we are starting to work our way into this discounted zone. And so we can start to look for shorts shortly. Okay. Let's go into the 5 minute. Just to go to the next day. Okay, we're now nearing that 6 a.m. mark. Okay, so we get the sweep to the downside here. Once again, we've taken, let's see, we've taken one loss. This was a no tag. Okay. So we took a win here. Okay. And these two losses. Okay. Right. So we've had price sweep to the downside, and now we are looking. So price has taken out the Asia lows, and now we're looking for price to change character to the upside. Again, we are looking to trade towards this white line currently. Okay. We have not come into a premium zone just yet. Now, for me, my change of character would be here because this candle did not break the previous candle's high. Okay, and this candle took the low. Okay, so for me, that is where my change of character is. This technically breaks that. Okay, and so now I would be looking to get in long. Okay, at this area. Them's the rules, folks. I just follow them. Okay, and now we're looking to trade potentially to the high of Asia, okay, or even to this white zone, okay, but I will take the high of Asia. Okay, so we tagged in. Okay. And there you go, we're off to the races. Okay. So we've had price sweep the highs, okay, and now we're looking for entry. Now, for me, a 1 to 3 is good. We could technically trade towards these highs, but we can see that price is really going to the downside a lot. And so I would rather not trade. Remember, on the high time frame, we are bearish. So we're not looking to take trades very, very far, okay? At taking a 1 to 3, okay? Because we do not want to push this for too long, okay? Because we are, firstly, motoring down, okay? We've had our change of character, okay? We have all of our rules, but we are bearish, guys. We are bearish on the higher time frames, okay? We do not want to be, we are busy just playing a retracement. So our chances of having these moves that go crazy far is not hugely likely. Okay, so we hit our 1 to 3, okay? So that is a really great trade. There is still room for more trades as well. So we could look for price to break these lows once again and then hop into another trade, okay? So let's see what price decides to do. Okay, so we break the lows once again, okay? Again, there's a lot of people that have gotten into positions on this jump hoping for price to push up. We've now liquidated their stops, okay? So now we could potentially go in for another position. We would wait for price to liquidate the highs once again, which would be this point, okay? Well, in fact, it would actually be this point here because this was the last candle, not to break the previous candle's high. This one did, in fact, break the previous candle's high, okay? Okay, so price continues lower. Okay, let's see. The low of this candle is 711. They're both 711, so they don't count. So this would now be the high. Okay. Okay, price continues lower. This would now be the high because this candle does not break this previous candle's high. Okay. This candle here. Okay, price continues lower, okay? So again, we're just looking for that change of character. We now have that mark moving down here. Okay, so now we've had the change of character because this candle did not break this previous candle's low, and so it now changed character. Okay, so now we're looking for the fair value gap, which we've got right here, okay? This here is our fair value gap, and so now we can look to take price long once again, okay? And again, I'm not going to look for a huge risk reward, okay? Because we are in a bearish overall trend on the higher time frame. We're just looking to play a very small retracement, okay? And that's how you can gauge your targets accordingly, okay? Let's see if we get tagged in here. It just misses us literally by a hair, okay? Very unfortunate, okay? This was the gap, but we got missed, unfortunately. So that would have been a nice trade to grab, okay? Once again, you can see I'm not doing this with any hindsight, so I'm literally just waiting for my edge to play out. And once again, I didn't even trade this week, so I didn't know. We had price tap into this here. So again, if we had our limit still sitting here, potentially once price taps into this, okay, there you go. Okay, so price tapped in, and it went, and if you kept your limit there, you would have taken this trade, but for the purposes of this video, I won't bother to take this, okay, just because price, as you can see, already moved so far, but you can just see how price respected that fair value gap with the liquidity that was left behind, okay, it just tapped in immediately, and it went for the 3R, okay, and it will most likely take out these highs as well, okay, also because we are in this big area here that I marked out previously. So let's go on to the next day, which is in fact today. So let's see what happened today. So again, I'm only going to count one win on this day just purely because literally that trade went without us, okay? So I'm not going to trade in hindsight like that. So we've had one winner here. Okay, and this trade did not tag us in. Okay, this trade here, this trade did not tag us in. Okay, let's have a look at the previous day. We had 2 losses here. Okay, And here, so this trade tagged us in for a winner. Here. Okay. So let us move forward. So we've had 2 losses and we've had 2 winners. Okay, this was a no tag. There's our winner. Okay, let's go into the 15-minute and do one last day, right? Okay, we're looking for 6 o'clock. Okay, we've gone to the 1 minute. Once again, guys, we are still in a retracement. We have not come up above this area, okay? So we're still looking for potential longs, okay? We're not looking for shorts. So we've potentially going to have a sweep of the highs here, but I still would not get into shorts because we still need to come up higher to potentially facilitate these lows, okay? So I would not be getting into any shorts here, okay? And technically this here would have worked out, but personally I would not have got into this. You could have taken this short right here, okay? But again, I would not have, because I want price to come up here before I start looking at shorts, okay? Because technically we're still retracing back into that discounted zone. So let's see if we can get into any longs once price sweeps these lows here. Let's see if price decides to come down for us. Okay, so price does not come down for us, okay? So, yeah, we missed out on that trade there, but this in the long run keeps you profitable, okay? Because you're practicing discipline and you're trading with the higher time frame narrative. We are currently busy retracing into a discounted zone, and so here I would not be looking for shorts, okay? It's just not very high probability. On this occasion, it did play out, okay? So here we go, folks. We've got one winner here. This we did not count. Would have been a winner as well. Technically a very, very big winner, actually, for about 14 risk reward potentially. But I won't count it because, again, price moved without us before tagging us in. Okay, and so I'm not going to catch a falling knife like that. So we took one winner here for 3 risk reward. Okay, and then we took... So it's a 15-minute. We took 2 losses here, 1 no tag, and then this winner here. This winner is a 2.89. So that's 5.89 minus 2. So we have 3.89% from Friday. Okay, so from Friday, let's see, did we not go further back than this? Let's double check this here. There's no trades here. No trades here. Okay, so from Friday, this was Monday, the 26th of June, till today, okay, the 4th of July, okay, we've got one win, and 2 losses. So we've got a total of 3.89% that we managed to bag if you're risking 1%. So that just shows, guys, if you are trading with the higher time frame narrative, waiting for price to break structure on the higher time frames before waiting for price to retrace, okay, you do not want to be getting into longs, okay, if price is busy retracing to the downside, okay. And if you use this framework, you can stay out of the nonsense, okay. You do not want to be taking longs in the middle of nowhere when price has just broken the highs, okay, because price is about to retrace to come into discount, and so you're going to be looking to trade with that higher time frame momentum. So hopefully this helped you guys, and if you guys did enjoy this, please do click the subscribe button down below. Thank you very much to everybody for your support, and I'll see you in the very next video. Cheers, everyone.